Hi folks, how are you? It's Sunday, July 12th. So I'm going to do a little impromptu technical analysis video for you today. And I'm going to try and keep it as unbiased as possible and just kind of talk about the levels and the charts from an unbiased perspective. Let's see what we can do. And if you think that I'm biased, then tell me in the comments below, because sometimes biases come out subconsciously, by the way. So looking at the S&P 500 futures chart, it could be said that we're in a trading range temporarily between 23.31.25 and 29.23 and 3/4. That's our trading range that we're in. It could be said that we are scouting a lower high. So basically in terms of resistance, all we have is 31.84 to be looking at, and then above that we've got the highs, which are 32.31 essentially. If we lose that 4-hour trend before we break that resistance, it could be said that our daily lower high would be set here. So again, when markets tightening up, learn to just sit back and watch sometimes. Let the opportunity come to you. So that's where we stand with the S&P 500. And again, we're not too far from our all-time high at this point. I'd say we're about 6.5% from our all-time high based on where we closed on Friday. So 6.5%, I think that's certainly doable at this point. So all-time highs are in the cards for the S&P 500, I'd say. I'm looking at the NASDAQ at all-time highs and blue sky breakout. So we haven't lost the daily trend since March. And since April, we've been in a daily uptrend. So as long as we stay in a daily uptrend, bulls generally remain in full control on these longer term charts. When we lose the daily uptrend is when we would start to see potential consolidation on the weekly chart. But again, no signs of that yet as we're at all-time highs. So we're in a very interesting place in the market right now. Let's look at the Russell, and you can see the Russell is in a similar type of trading range like the S&P 500, except we're in the lower part of the range, as Russell is more heavily weighted in the financial sector. Our higher low to be watching would be 1359.6. If we confirm continuation of this hourly bull trend change, 1373 is our daily higher low that had already formed on Friday morning, I believe. So that's kind of where we stand. Again, Russell, similar correlation to the S&P 500, except just a tad weaker. So in terms of where we stand from all-time highs, the Russell looking at more about like 22.5% away from its all-time high. So the Russell definitely the laggard sector. So let's go ahead and look at our big old blue chip names here. And again, I want to try and keep this as unbiased as possible. So Apple, all-time highs, that weekly chart is quite extended and hasn't consolidated in a while. I'd say a loss of the daily trend would signal potential weekly consolidation, although we're not there yet. So every single candle has a higher low for the last 8 days in a row, and then the last trading day was in fact an inside bar. So if we break the low of last week in the next session, then it could be said that we have in fact lost this pattern. So once we break the pattern with actual follow through, we could potentially see some further consolidation. As you can see, we've been floating here for many days in a row, creating these higher lows. So bulls in full control until we manage to at least lose that hourly trend. So our support on the hourly chart is 328.69. Let's look at Microsoft. Some similar action, although there was some more profit taking in the middle of this action, but it could still be said that we're in this sort of land of complacency here where there's a lack of resistance and we're just kind of in blue sky breakout. So you can see a couple of these days here had bearish closes, although we still held the support. So like this day right here, it broke the lows by 8 to 10 pennies and then continued higher. So that's not an example of a true bear break. And again, here we had a gap up open and then some profit taking, and then we had an inside bar the following day. So I'd say until we lose hourly supports, the bulls remain in full control. So this support has been in play for 2 days now. So you're talking about 211.50. After that, we're looking down at around 208 for support. So keep an eye on your hourly trend, as it's going to be a potential indication of these daily patterns being lost. Take a look at Amazon. It's a similar story here. 8 days in a row with a higher low. So once we lose that pattern, we could look for some potential daily consolidation. But again, the bulls remain in absolute full control. We haven't consolidated on the weekly chart since May, and our weekly higher low, depending on how you see it, 22.56, and our last daily higher low is 26.30. So until we lose the pattern of a higher low every single day, bulls remain in full control. And again, watch the hourly uptrend. As you can see, we haven't lost that since here. And here we lost it. We confirmed an hourly downtrend into no follow through. And then the bulls just arrived to buy the dip. And again, we're at all-time highs. Until we lose those hourly trends and those hourly supports, the bears are not going anywhere. So there's no reason to sit here trying to short the market when the market's moving up like this. And a lot of people don't understand this clearly because there's a lot of bears And I've seen this. All you need to do is look in a couple of chat rooms. You'll find a few that have just been sitting there trying to short the market for months and months and months and just losing every time. So it's really sad, but unfortunately there needs to be suckers in this market in order for people to make money. So that's just how it is. Okay, so let's look at some high flyers now. Look at Shopify. And this chart is quite interesting. Weekly chart. So this bull run in particular was quite amazing. So from 100 to 400. And we thought that was extended. You can see how we consolidated. Did in fact confirm a weekly downtrend with no follow through, and then the bulls arrived to buy the dip again. Consolidated for a weekly higher low. You can see a weekly trading range, and then the bulls arriving again. So Shopify bulls are in full absolute control. It's looking like it could be in bubble territory, but again, I don't know enough about the fundamentals of the company to say anything further than that. Our last daily higher low that had formed would be around 868, and then if you consider this level, 973. So these two levels are supports that could potentially be in play in the coming weeks, because as you can see here, we've been 1, 2, 3, 4 inside bars in a row now, meaning that the hype train could be potentially calming down. Now again, when looking at these inside bars and charts, sometimes you can get a bit more insight by looking at a volume profile. And look at that volume profile up here, and you're going to see how, in fact, there is less volume, but there's also a lot of bear volume. If the bears can't really push this below these supports, then these longs are not going to have any reason to liquidate, and therefore we could easily continue seeing higher prices. And that's the point of trading with a trend, because it's all about where the price trades in relationship to the volume that has taken place, right? So if a lot of sell took place, if a lot of shorts are involved in the market, and then the market can't trade lower, guess what happens? The shorts are going to eventually have to cover or else be deep in the red. So again, Shopify, definitely in bubble territory. And let's look at Tesla, definitely a high flyer. Again, I don't know if you were looking at my videos last week. I was pointing out that there was a lot of bear volume in these candles here, and then I said that in the same thing I just said about the other stock, is that if we see a lot of bear volume and then the price can't go lower, what's going to happen is that when we trade higher, bears are going to be underwater, so that could cause a short squeeze. And again, Tesla, you know, lulled into a state of complacency. This is just maximum hype and euphoria, at least it looks that way. And again, not talking fundamentals at all, like Tesla could be a great company, whatever, but in terms of the chart, we're at all-time highs, blue sky breakout, and bulls are in full control. So at this point, anything above 1311 would be a higher low, and below that there's pretty much a lack of support all the way down to 937. Bulls are in full control as long as we hold these higher lows, and we'll see how the price action continues to develop as time goes on. ZM, this one's a pretty trendy, popular stock. So very extended, definitely in bubble territory, and we're still making higher lows at this point. So looking at that daily chart, anything above 240, 359 is in fact a daily higher low. Once we lose our hourly uptrend or 4-hour uptrend, we will look to see some potential daily consolidation. We're in blue sky breakout for ZM, 276. As long as ZM continues in these hourly and 4-hour uptrends, there is no reason to short it. In fact, here 1, 2, 3, 4 candles with a higher low in a row. Can we continue that pattern? We'll see as we progress on Monday. And again, looking at these charts in terms of higher lows, we have 243.60, 258.10. Those are two levels that stand out for me in terms of higher lows. So if we lose those levels, we're in daily consolidation. And again, consolidation is quite important because you can see here we had massive volume every time it consolidated, but every time it just got no follow through and the bulls just arrived to buy the dip. One indicator you can look at is glance at stock twits, not to see what people are writing, but they have this sentiment indicator here. You shouldn't use this to make trading decisions, but you can use this to just gauge some sentiment. So look at ZM, click on the sentiment, you're going to see that the majority are bearish. So that's not a good sign, in fact. If the majority are bearish, then probably it's going to continue higher. And if the majority are bullish, then you should look to be cautious, right? Because remember, when the herd is looking bearish, it's not the herd who moves the price. So just remember that. Netflix, all-time highs, blue sky breakout. Beautiful bull. Look at that. We had a little bit of a weekly trading range that broke bullish. And at this point, there was generally a lack of support all the way down until 432. So we'll see how the bulls can follow through with this. But again, we're going into earnings, so just be cautious. So it's potential that we could expect some profit taking going into earnings, especially seeing how extended we are. Bulls might look to take profit after seeing that kind of action. Nvidia, another name at all-time highs here. So again, with this same sort of pattern where we have 8 days with a higher low every single day, when we lose that pattern, potentially we'll see some consolidation. I'll say it again. It's about where the volume takes place, but more importantly, it's about where the price trades relative to where the volume took place. So we can see a lot of bear volume, but again, if we reach a point where we get no more follow through on the bear side, then the price is likely going to go up and test those shorts out. And again, that's what tends to happen in uptrends. So as long as we stay in these beautiful uptrends, there's no reason to short this market. And again, if you're sitting there trying to short this, you've probably been losing a lot of money. And personally, I don't want to put myself in that position. If you were looking to make a bearish entry on, say, ZM, one thing that's keeping me away from it is the fact that StockTwits is too bearish. And the fact that the strength of this uptrend, and there's no red flags at this point. You know, as much as this looks like a bubble, there's no reason to short it yet. Yes, it's too extended. Yes, we're probably being lulled into a sense of complacency. Yes, there's a lot of retail stimulus money in the market, probably buying up these stocks. But at the same time, there's no reason to short it until the market says so. And again, technical analysis, understanding trends, understanding sentiment, all that stuff is going to help you play into understanding how to trade these things. You know, from a day trader perspective, you want volatility, and there's tons of volatility, so there's no reason you should be sticking to a certain bias that you want to be short, you know. But let's say I wanted to think of a bearish entry on ZM. I mean, yeah, I'd probably buy puts, you know, 6 to 8 months out, but at the end of the day, you got to keep that risk managed. I'm not going to sit here putting my entire life savings into shorting ZM for the next 6 months, although potentially that could be a good trade. Anyways, that's going to be it, guys. That's going to be it for today. If you learned something from this video, leave a thumbs up. I'll catch you in the next video. And remember, none of this should be considered financial advice, and I will catch you guys in the next video. Take care. Bye.